Hello, welcome everyone to From the Ground Up, where we talk to entrepreneurs all over the world about what they're doing, their businesses, and what you, entrepreneurs in the audience, can learn from these entrepreneurs. And today we have a venture capitalist. We have Jacob Frankel from Beyond Alpha Ventures going to talk to us about the way investing has changed. If you are an entrepreneur out there, well, let's introduce you, Jacob. Tell us all about yourself,
And
and
feel
then we'll
free to
get
call me
into
Kobe, by the way, John.
well,
Yeah. I,
yeah. I mean, there's a lot of good stuff that we can talk about today, but I want to just give us your background. And you're with Beyond Alpha Ventures, and you're over there in New York. Tell us all about how everything's going.
Absolutely. And feel free to call me Kobe.
That's
Jacob is
right.
my legal name, but yeah, I'm Kobe Frankel. I'm the CEO and founder of Beyond Alpha Ventures. We're a multi-strat family office and hedge fund based here in 40 Wall Street, down in the heart of the financial district here in, you know, Manhattan. And we have a large focus within the public markets with our DMF trading fund, as well as our venture capital arm, which is primarily investing right now in Series A to Series E companies, disruptive technologies within cybersecurity, quantum computing, and artificial intelligence specifically.
So, how did you get started, and how did you, you know, tell us what the investing atmosphere is like right now? How's everything going with the new administration and all of that?
Yeah, look, I mean, I don't know, just about 20 minutes ago on the tape, Zelensky and Trump were in the Oval Office, so it's been exciting times, to say the least. The market definitely, you know, fears uncertainty, so volatility comes behind that, and we definitely make our money on volatility. So we're very much akin to some of the geopolitical and macro environment things that are coming into the market, which ultimately, benefit us, from a trading perspective, and also creates a lot of dislocation in the private markets as well, because sometimes you'll see, sellers trying to obviously, create liquidity or, deploy capital in specific names because of some of the things that are happening geopolitically, like with what's happening in the drone space as well, specifically too.
Yeah. So as far as getting started in, creating the business that you have now and becoming a venture capitalist, sort of what personal experiences led you to focus on trying to help startups? Because it's startups that you focus on mainly, right?
Yeah, yeah. So, just rephrase the question for me again. I'm sorry.
Yeah, no, all good. Like, what were some of the personal experiences that led you to want to, and then why did you end up wanting to be a venture capitalist, basically?
Yeah, I mean, look, I think for me, it's really about making a difference, right? It's one thing to make money; it's another thing to deploy capital and make money on investments that are actually making real impact and having a real betterment, and a real change in our modern day society. So we try to deploy capital into companies that aren't just disruptive technologies, but are technologies that have a real time application to make a change in our modern day world. So whether it's a company like Sandbox AQ that's utilizing their large language models and large quantitative models to spoof drones out in Russia and Ukraine or Israel to effectively help us win the war out there, or using their LQMs to expedite FDA clinical trials to cure Alzheimer's and Parkinson's. Those are the types of things that matter to us, and that we think not only are we making a substantial what could be 10 to 100x on our money, but also at the same point in time, we're making a difference in people's lives while doing so. So,
A lot of the people who watch the show are, startup founders and entrepreneurs, and they're looking to try and attract people like you and, and good investors. So, what are sort of your evaluation criteria now, especially compared to like 2, 3, 4, 5 years ago? Because I know it's a different, for the founders out there, knowing how they should try and find folks like you. So, yeah, what are you looking for, basically?
what are we looking for in the market right now?
No, no. Well, sure, but also like again, so your evaluation criteria, like 5 years ago, what was it
Mm.
like? What is it like
Ah, I
now?
see, I see, I see. Yeah, yeah. Look, I mean, 5 years ago, if you were to ask me, it'd be very different, right? The market before COVID was very, very different. But right now it's become a lot more fundamental. I think people have become a lot more not defensive, but more hesitant and more kind of due diligence focused, especially within the crypto and blockchain space. After FTX, it's kind of opened up a lot of eyes on the DD side. So, at the end of the day, what we look for specifically is companies that are, EBITDA positive, 5 to 15%, positive.
When startup founders are looking to attract investors like you, what are some of the biggest like misconceptions that you've seen them have about what you can bring to the table?
Yeah, I mean, look, there's a lot of companies that just want easy money. At the end of the day, I'll be honest. There's probably 5 to 10 deals that come across my desk every single day, and whether I'm a personal friend or a relationship that's a referral on the deal, it's tough to say no to people sometimes. But you also have to be very selective and disciplined. One of the things in venture capital is, at least for me, is I try to be very disciplined in my approach, right? Beyond Alpha, we're always kind of looking for ways to make money, but at the same point in time, I like to stick to what I know and stick to kind of things that I have a concrete understanding will make money, and try not to go off the menu, so to speak. If that makes sense.
Totally, yeah. I mean, as far as continuing on the advice for entrepreneurs on how to get funding, tip here, what are some key things that entrepreneurs out there should try and do to prepare in this fundraising climate? What are some key things they need to do?
Yeah, I mean, look, you constantly need to be networking, right? I mean, at the end of the day, sometimes you don't realize it, but the money you're looking for could be right in front of you, and it could be your girlfriend's uncle, it could be your college roommate and his father. Who knows? At the end of the day, at the end of the day, you have to get your story out there. You have to talk about and have passion about what you're working on, and don't look at it as a sale, look at it as giving people the information. And if you give the right people the information, those people will take that information and either invest or not. And at the end of the day, it's just about targeting the right people. So
Nice. Yeah. One of the things that we talked about before was, when we before we got on the interview and getting the background information on you, I have information here, proving traction. So, what type of things, as far as these companies, when they want to prove their traction to you, what are some of the key things you're looking for there on that?
yeah, for proven traction and kind of a way to validate track record, right? You can look at, whether it's the CEO's previous, companies that he's ran. You could also look at, really I'm a numbers guy. So, I'll be honest, I look at the numbers. So numbers don't lie to me. But in terms of proven traction, you can look at the total addressable market, the TAM, right? You can kind of look at, the different possibilities and comparable companies in the market. So if there's comps in the market that are doing, substantial numbers, and you think this company, has a relative, very similar business model, or a very competitive business model, you could, correlate how that track record could be successful, if it has the capital to do the same things, right? So.
Yeah. Well, so how can founders tell if they're actually VC backable, like, or if they should explore alternative funding strategies?
I mean, that's a great question. I mean, look, if you're a founder and you're wondering if are VC backable, I'd say right there out of the gate, you probably shouldn't be a founder. But at the end of the day,
Tell me about that. Tell me about that. Why do you feel that way?
because you have to be confident, right? I mean, if you're questioning whether your product or whether your company is legitimate and has the ability to succeed, then you probably shouldn't even be doing it, right? So, you have to be all in, right? And I think for me, it's about, I played, just to give you some background, I played, lacrosse professionally, played for the Israel national lacrosse team. And in college, my one of my biggest mentors in my life was my college lacrosse coach, and he kind of taught me a lot about grit and kind of a one speed only mentality, right? And if you're going to do something, you have to do it right. And I believe that if you're a founder out there trying to aggregate capital to grow your business, you have to drop everything you're doing, drop those side jobs, drop any other things that are distracting you from your main goal, and effectively go out there and make it happen. Right? Set those objectives and meet them.
Yeah. Beyond venture capital, what are some of the other sort of alternative funding strategies that you would recommend for founders to explore too?
Yeah, look, if you're a company that's revenue positive, there's tremendous amounts of debt facility financing. I mean, you probably hear all over the news. Private credit is a buzzword that they love saying on these CNBC and Bloomberg channels nowadays. But private credit is certainly the here and now. We're in a macro and micro climate that, let's face it, you have inflation all time highs, stock market all time highs, business and personal credit card debt all time highs. The government's debt all time high. So it's very unsustainable in my opinion. But at the same point in time, it's creating a banking infrastructure that is in some ways being more friendly in terms of the private equity climate. So if you're a private equity group, it's more attractive for you to compete against the banks now, because the banks aren't as willing to give out loans as they were back in the day, because their balance sheets aren't as big. So right now, it's given a lot of interesting and creative ways for private equity to come in and capture some of the upside on a lot of business opportunities, because banks aren't really doing the you know doing what they used to do, right? So
Let's talk about scaling efficiently, because I know that's something that you are a big stickler on. You're looking for, the companies that you invest in. You want to see if they're scaling properly. What are some of the key factors that founders should work on from day one in order to be scaling efficiently?
yeah, I mean, look, to scale efficiently, I think well, look, if you're a company that's private, to go public is the number one, scale factor, right? Because when you go to the public markets, you have that employee stock plan, so you can stop raising capital to pay your employees. You can start using ESPP employee stock plans, and effectively use synthetic equity in the sense that you can grow out your manpower and your sales force. In that manner, also through acquisition and M&A, using the public cash flow of a public company, you have the ability to, acquire IP and acquire talent. So that's, obviously the most organic way to scale. But in terms of scaling efficiently as a founder in the private markets, I think you have to be very strategic in terms of the capital you're deploying, and you have to work with the right people and create an infrastructure that's really kind of a flywheel distribution model, meaning what I believe in. I was mentored by an MIT professor, Richard Dahan, who told me that effectively, if you incentivize people you know to come to the office, or I should say, if you incentivize people with thresholds, right, and you give them hurdles, meaning similar to how you saw Elon Musk with his big $56 billion payout, right, with Tesla, where, in that circumstance, if Tesla hit a specific market cap valuation or stock price, he got a specific amount of payout, right? So you have to hit hurdles and give your employees incentives where if they produce this much, they get this much. And that way, their incentives are directly aligned with your company's growth, and you're not chasing your employees into the office 9 to 5. Go back to what I was saying. But yeah, I think that's one way to scale efficiently is using that type of model.
Nice, nice. Talking about AI, I know earlier when we were talking, or getting information on talking with you, AI was mentioned as something that you're definitely big on. So tell me about the role of AI playing in startup growth today, the role it plays in that. And are there any tools that sort of you recommend that startups should be definitely using in the AI realm to help them along?
Yeah, look, AI is definitely, they say it's like the .com bubble, but it's a little different, right? I think, man, AI is bringing a whole new revolution to the market. In every single industry, in every sector. I think we've first seen it with ChatGPT, right? ChatGPT is kind of just the retail functionality that people can use for their everyday life, whether it's emails or effectively spreadsheets, any type of documentation that you need to, scrub or you need to respond and utilize artificial intelligence to have a more rapid kind of task force, right? So it's essentially utilizing AI to not only be, your not your note taker, but you can use it in ways for like Otter AI is another example as well, where it's an application on phones that allow transcription. So effectively, you can record your calls and have almost a deposition on every single call you have. So if you're one that has a bad memory or just has that many calls during the day, and you need to go back and see who was on calls, or you're running a big company and you need to see who actually logged on to the call. That's another way. That's another tool. Look, every single day there's new apps and new different types of functionalities that are coming out. I think the next thing we'll see is quantum computing, and I think
Mm.
quantum computing will be probably the next wave of AI. As we roll into the second calendar year of 2025 here.
Yeah, I'd love to ask you sort of what you see that looking like, but because I honestly don't have, I just know it's faster. That's all I know. But what's sort of the basic deal for what's the too long didn't read short thing
Yeah,
on that?
yeah. The 30,000 foot overview on quantum
Yeah.
is, it's very scary. It's like robots, right? It's inevitable. It's coming. It's very scary. But at the same point in time, it can be very purposeful. So, um, at the end of the day, there's right now a very high barrier to entry in quantum, meaning that there's only a very selective amount of quantum computers out there because of the expense and because of the technical aspects of actually running a quantum. So I don't think we'll have quantum computers until 5 years from now.
Mm.
But until then, they're going to implement. Some companies like Sandbox AQ, for example, will implement quantum computing technologies into the modern day GPUs that we're using, and hardwares that we're using, like our laptops, our phones, our TVs,
Mm.
Xboxes, whatever you're using, and iPads. And essentially, in 5 years from now, that may change, but for now, I think we'll see the large language models and the large quantitative models be utilized to enhance whether it's an FDA clinical trial, saving time duration and capex expenditure, or whether it's in the oil and gas industry for data and supply chain logistics to make it more efficient for tracking and trucking logistics, right?
Yeah.
There's a plethora of verticals that technology can be used for, and the most evident is probably in financial as well too. So
Nice,
we
Kobe.
we've
Thank
seen
you.
that with algos. Yeah.
Yeah. Yeah, for sure. All right, Kobe. In your experience, you have startups that fail and startups that succeed. There's a lot more that succeed, or rather fail, rather. What are the difference between the startups that fail, which is most of them, and the startups that succeed? What are the big differences in your opinion?
I mean, there's two things. One, I think it always comes down to again the leadership and the business model, right?
Mm.
Um, I think, and the third is, and the most important, I think, is the culture, right? The culture of a company can be absolutely critical, right? Look at Nvidia, for example. I mean, that company is just an absolute behemoth. I think what Jensen Huang has done there has created a culture, right? He's created a culture of success and a culture of you winning, really, right? I mean, look at the last 10 earnings they've beat, and raised last 10 times. You just historically have never seen public companies come out and continually beat, and raise. I mean, it's insane that the stock, this week actually had earnings. They beat, and raise, and the stock's down. It's just like that just goes to tell you the market's a little bit off right now because historically speaking, when a company beats their earnings by $1.18 billion in revenue for that quarter, meaning they made $1.18 billion more than people expected that quarter, not that year, that quarter. You
Ah,
think the stock would be up, right?
yeah.
So it just goes to show you what kind of market environment that we're in, and kind of the way that the people are and the sentiment around the market is. And look, again, I think it goes back to what I initially said in the beginning of this call with what happened in the Oval Office this morning with Zelensky and Trump.
Big blow up. Yeah.
Politically, people are very scared with the tariffs, with the new legislation coming out. But at the same
Mm.
point in time, for smart investors and venture capitalists, that means that there's going to be a lot of capital and a lot of government capital being deployed and also recapped and recalled into specific sectors and specific companies. So if you can be early to those companies, you're going to make a lot of money.
Yeah, yeah. So let's talk about the next. Looking forward here. So, if the last 5 years were a chapter in your life, what would that chapter be titled? And then, what will the next chapter be?
Hmm. I'd say the first inning. uh, we're just getting started here at Beyond Alpha. I think that right now we're in a huge wave of artificial intelligence, quantum, and cybersecurity technology. And we're very excited about what's going to come in the next 5 years. We think that there's a tremendous amount of generational wealth that will be created, similar to what people experienced within the crypto community buying Bitcoin early. There's a tremendous amount of, in my opinion, generational wealth that will be created in, some of the early technology companies that will come to the market. And we've seen, look, historically speaking, the IPO market's been absolutely dead in the last few years since COVID, since we saw the SPAC boom, right? And I think that now with Trump back in office, I think with regulatory, um, scrutiny kind of shifting gears. I think artificial intelligence will come back to the forefront. And these companies that have been on the sidelines raising tremendous amounts of capital, like you've seen XAI with Elon Musk, you've seen Anthropic, you've seen Anduril, some of these other companies
Yeah.
out there. There's going to be a huge influx of IPOs coming and M&A. And I think that the people that are, involved in those companies prior to them hitting the market will be very successful and rewarded for their patience.
All right. If I have you back on the show 1 year from now, what will you be celebrating at that time?
Hopefully, Sandbox AQ's IPO, but yeah, because that's my largest position in our VC portfolio. But
Yeah. Tell
yeah,
us a little bit about them too, if you like. You mentioned them a
yeah,
few times, but yeah,
yeah,
tell us.
Sandbox is they're the number one bona fide the number one quantum computing, artificial intelligence, cybersecurity company in the world. They were spun out from Alphabet Google back in 2022, founded by um, Mark Benioff, obviously CEO of Salesforce, and Eric Schmidt, former CEO of Alphabet Google. So they spun out with 20 employees back in 22, now sitting with over 200 plus as we speak today. The company's doing billions in revenue, annual recurring revenue. They're very, very serious, not a startup, that's for sure. They just announced the commencement of their Series E round of financing, so they're looking to go public imminently here. And they're doing serious business, man. 40% of which is DoD government contracts with the likes of NATO, Pentagon, U.S. Air Force, U.S. Navy, right? Then you have on the commercial side, NVIDIA, Boeing, CrowdStrike, Zscaler, Google, their parent company, obviously, Google Cloud, and Salesforce. And, we've seen Sanofi and Saudi Aramco as well be two major blockbuster announcements in the last really 14 to 30 days as well. So, yeah, it's one we're excited about for sure.
Kobe, if you ran into yourself uh, as a younger entrepreneur, what would be the biggest piece of advice you would give your younger self?
Uh, I mean, two things I'd say. I tell myself to slow down and to, kind of also uh, look at what's around myself and analyze the situations that I have and be more selective and try not to do everything all at once and try to block and tackle and take on one thing at a time.
Very good. So beyond Alpha Ventures, Kobe Frankel, tell us how people can find out more about, how reach out to you, hopefully get
Yeah.
funding from you if they're the right company and all the
Yeah,
rest of
yeah, yeah. Feel free. You can reach out. We have our websites www.beyondalphaventures.com. Alternatively, you could reach out to our email admin at Beyond Alpha Ventures or jfrankel at beyondalphaventures.com is my email, and more than happy to hear from anyone. Yeah,
it. Kobe, great to have you on the show. Hope to have you on the show again soon.
absolutely, John. Pleasure speaking to you and pleasure being on here. And thank you for everyone who's listening. And hopefully, you make some money with what I gave you.
Sounds good. Yeah, that's what we all need. See you, man.
Yeah.